Hello, hello, hello. We're back after the break, and we're gonna start with a panel on accelerators. The accelerator ecosystem or environment has changed in the last years. So the basic model that was applied started changing depending from accelerator to accelerator. Some people went into early stage deals and they gave up on the program. Other people have like a mini program, but it's not time bound, so they take startups at any point in the year, like seed camp. Others are starting to go for niches, so like vertical type accelerators. Others are doing something completely new. So the industry is actually changing, and we're at a turning point. Because we're here in the ecosystem, we made the decision to invite people from all of these different attempts and verticals in the accelerators and discuss and debate what was and how they see things that are gonna go and what their best bets are. So I'm gonna invite on stage with me Todor Breshkov, that's right, from LauncHub, Martyn Davies from Ignite 100 from London, and Rune Thiell from Rockstart. Here's the mic.
Yeah, thank you. Hi, guys.
So before kicking this thing off, I want to tell you that all of these people that you see here, they're decision makers in their own accelerators. So we are actually going to get some answers and some information from people who build a strategy and are like extremely involved in the way their accelerators are grown. So now, let's start with a little bit of history and just tell me, what have you been doing with, how did you start with your accelerators like 2 years ago or 3 years ago, or the accelerators that you've been involved in? Because no, Martyn, this is like your first time actually running an accelerator on your own. So, Rune?
Yeah, so I co-founded Rockstart approximately 4 years ago, and with a goal to support startups within the first 1,000 days of existence. And one of the things that we wanted to do was an acceleration program. So that was the first things that we kicked off. But the acceleration part was just one of the phases that we wanted to cover within the first 1,000 days. And since then, we developed into co-working space, 3,000 square meters in Amsterdam. We have a community event that we run across Europe, also here in Bucharest once. And we're looking to sort of find the next level to support startups after acceleration.
Okay. So, Martyn?
So I come to running Ignite London from having been a serial mentor on many accelerators across Europe and indeed the world. I spent probably about the last 4 years working with early stage startups, both as an investor, as an advisor. And in my previous role as head of Europe at SameGrid, I worked pretty much exclusively with accelerator programs and with early stage teams, doing an enormous amount of mentoring. I started working with Ignite really about just under 3 years ago, both as a mentor and then later on as a venture partner, which was basically I kind of helped them with deal flow and finding teams for them on my travels around Europe and pushing them back to the program because I believed in the program that they had going on there. And then when they decided to expand from just being based in Newcastle, where they have been for the past 4 years, to opening up Ignite in London and then later next year in Manchester, they asked me to come on board at that point, and the timing worked very well. They needed me from September, and that's when I'm on. So I've literally just closed the final decisions on the teams that I'm going to be working with in January, and we kick off Ignite London for the first time on January 11th.
Todor?
Hi. So we started something like 3 years ago, if I remember correctly. And we are totally dedicated to the region. Back then there was almost nobody in the region doing what we are doing, just another fund also in Bulgaria, 11. Yeah, we are doing almost the same things, trying to help the early stage startups. We initially started with a program that after the first or the second batch we decided just to go without a program, but to try to work with the different companies on a case-by-case basis. And for the time being, it seems that with us, this is something that we feel more comfortable of doing instead of the budgets and
So
the
this
acceleration.
brings us to a point we wanted to touch in this conversation. Why did you decide to give up on the formal program?
So, from my perspective, it totally depends on the strategy of the company. I mean, the people running, the team running the company, whether you call it an accelerator or a fund or investor, whatever it is. So there are different versions. One of them is taking the companies in badges and trying to help them and let them help each other, bringing them into one and the same place, which has a lot of positive things, in my opinion. We decided not to go that way exactly because we are trying to see companies, let's say, slightly developed stage in terms of early clients and already some kind of a product market fit, where each company has different challenges depending on how the team is put together, depending on what type of business they're in, and we found ourselves actually working more of a kind of team player with each company more on a daily basis and stuff like this.
So just hold the mic a bit. So just to understand, is it that when you did the program something didn't work for you, or you saw better opportunities?
We decided that it's a better opportunity and better strategy for us to look for companies in a more developed stage, and for the region it has its explanation. In our region it takes a little bit more time for a company to develop actually, because of different reasons, because there are less clients or potential partners that they can test with. The ecosystem is still fragile and not the depth of the ecosystem is not that good, so you need to step ahead of certain stage, because otherwise it takes a little bit more time.
Okay, Rune, you're at the opposite end. You've moved onto verticals, right? Am I saying that correctly?
Yeah, we very recently moved into 2 verticals.
Exactly. So you also changed something. You ran a program, but then you went to going to verticals. Why is that?
No, but that's not entirely correct. But we are doing verticals because we realized that there's 2 areas in the Netherlands we identified to be very difficult to penetrate. I think that's a worldwide thing. But there we gained the connections, and that was in health and energy. So there was 2 old markets where you really have to work with established players, and you have to validate your concept and your product through already very established channels where you need an entry point. And we felt that making them vertical in those 2 industries make a lot of sense. We also do sort of a horizontal program, which is any kind of industry. What they all have in common is really early stage. So we like to work with founders at the moment that have a product and a little bit of traction, some proof point that there's a market, but that's the moment we would like to get in. So maybe a little bit what you're saying is you want to be there when there's already like a proven business model and a proven business case. I'm not totally worried about that. I would like to see that as a market opportunity, and then I would like to co-develop the product with the teams. I feel the starting point is very important, and this is where we would like to influence as much as possible.
Okay, so then to continue on that and to clear some of the buzz out there, so what can an accelerator, what can you do for a startup at the stage that you're getting them, and what can't you do for a startup? So what can Rockstar do for a startup literally?
Yeah, but I think generally it's acceleration, right? It's accelerating what you already have as a team, the knowledge that you have about the market and the market opportunity. We might have a network that we can parachute you into, which make you grow faster than you would have done by yourself. But we cannot fix your team. So if you're not fully aligned on where you're going as a team and you really make that decision together to go into an acceleration program, you're not going to get the benefit out of it that you would if you're very committed and know exactly why you're there and what you want to get out of it. So I think there's certain elements that has to be there from the very beginning. accelerating learnings is a big part. Accelerating network is another part I would focus on. Accelerating, well, network, that's also in terms of investors. So getting to that level faster and have the opportunity to actually raise from the correct investors and not just the investors that you meet coincidentally in your path as an
Okay,
entrepreneur.
so if I were to summarize what I got from your replies, the fact that it offers opportunities, like that you can actually like bank on as you grow. I would ask you: is the acceleration like a catalyst for, let's say, growing the team, but also breaking the team?
Yeah, it is.
So
It exposes all your weaknesses. I think that's the strength of it. Like, you're gonna be in a room with 10 other very dedicated, or 9 other, in our case, dedicated startups, and it's gonna be very clear what works and what doesn't work in your company. You might be able to put, I don't know, to not reveal that if you don't go into an accelerator, but I think all the questioning that you get from mentors, the mirroring you do with other teams makes you vulnerable in many ways.
okay, Martin, Ignite. I know what Ignite London. Thank you. Ignite was an accelerator for first-time entrepreneurs. That's how it was first, like, advertised. That's right. Am I right? So, are you still doing the same thing now with Ignite London, or is it different? And do you see more of these issues of like breaking the team if they're first-time entrepreneurs or not?
I'd say that hasn't really changed. We've always worked at what we call pre-seed stage, which can be anything from, a team that just has an idea to, the very basics of, a minimum viable product. And, really what Ignite tends to really help with, certainly within the first kind of 4 weeks of the program, is to help teams to stop guessing about some of the things that they want to do, because really all they're coming in with oftentimes is a bunch of assumptions, none of which have been tested. And we give them the tools and the skill set to actually get to that point. And it follows pretty much exactly the same as what Rune said. It's about access to mentors. It's about access to that network. It's about going back and looking at the business from a sort of 10,000 foot view, and being able to spot where the weaknesses are and then iron those out. Weaknesses in team, as Rune said, if they're there, they're going to be there, and they will break at some point. I'd say that at the earlier stage, one of the things that tends to come to the fore on the program more often than not is that you've got, say it's a smart team of 3 founders. They all seem relatively into it. Sometimes there's always going to be one that just doesn't want to follow through on that and never kind of gets to the end point. Or they get to the end of the program and they realize at that point that they're about to go out and start raising money, and then it's, all of a sudden it goes from being this thing that they worked on together to being a very real thing that adds a sort of element of reality to it, which can scare some people away sometimes. And it's, what an accelerator I think tends to do is actually test people's level of commitment to each other and also to their idea. And that's usually where the breaking points tend to come out, is that actually, when it comes to making decisions based off of the feedback they're getting from mentors, oftentimes you find that there's 2 that really agree on something and then 1 that doesn't, and then they sort of start to get a little bit beaten down at that point. And you do start to see the cracks. Sometimes they'll get through it and then, be stronger for having gone through that process, and sometimes one of them or more of them will just walk away.
Question I actually stole from a friend. He's in the room. Why not? So, when choosing an accelerator, what should you look for to ensure like it's a good match for you? So, what should you look for? Is it how important is location? How important is meta network? So,
we were just talking about this with each other on the stairs, because I've been telling off teams already this week for not having done enough due diligence on us and what actually Ignite is about, even though they've applied for the program like 2 months ago. Okay, right? If you're going to apply for an accelerator, you need to understand who the people are that run it, what their backgrounds are, what teams they've worked with before, what does their alumni look like. Go out and try to speak to some of their alumni teams as well. Because the thing is, if they come and ask me about the program, I'm going to tell them what the program structure is going to be like. They've really got no reason to believe me, because I could just tell them what they want to hear. Right? If a team did our program and found it really valuable, they're going to tell other teams that. If they did it and they didn't think it was that valuable, they're going to tell other teams that. And I would much prefer that our alumni network goes and does that kind of marketing for us in that sense, rather than teams come to me and be like, so tell me what it's going to be like. Because, you know, I'm directing it. I'm not a team that's actually been on it. I know that it's good. We put it together. It's replicatable, but that's why we've moved it to 2 other cities. But if you're going in, you need to understand exactly what the offer is, what the terms are going to be. Speak to, you know, the alumni teams. Speak to mentors if you can find out who they are. You know, find out what my background is. Find out what Paul's background is. Find out what Tristan's background is. We're all very Googleable. Right? It's not hard. You know, it could take you a couple of hours to do, but it surprises me sometimes that teams, they're aiming towards joining an accelerator program, which in itself is quite a big commitment, but yet they don't seem to have put anywhere near enough of the due diligence in there before they make that decision. And it's like, actually, they won't even start to dig into it until they know they've been offered a place on the program, which is a bit of a strange way to approach it, I think. You wouldn't approach your business like that, but yet they would approach joining an accelerator like that.
Do you see the same for you, Rune, when people apply for your programs?
Yeah, I think it's very simple, right? You're getting an investor on board, and one of the investors could look like us and talk like us and think like us. The starting point is, do you like that potential investor? Would you like them to be on your term sheet for the rest of the company's life, with the good and the bad that brings? I think that's a very, very solid point. And looking at terms is another thing you should do early on, because accelerators have a tendency of throwing certain terms out there that they are not negotiating and not always in favor of the companies. I think I'm not talking about anyone here, actually, but there is certain accelerators where I would really look at the terms and understand what that means for the future of your company if you decide to take on some of these very radical terms. So there's some, well, hello. Yeah, there's some hard things that you can very easily check with a lawyer or somebody of your friends who knows about term sheets, and then of course all the soft factors which has to do with the people who's running it, the experience of the startups that already been in the program, and those things are really, really easy to validate. And if a program don't want to introduce you to their alumni, that's also a red flag, right? That's probably something you should think, why is that?
So just to explain what happened, Max came a little bit late, so I asked him whenever he arrives, just jump in the panel. He's Max from Techstars. He's the managing director of Techstars London. He just completed his first batch of startups like a few months ago. Yeah, month ago. So yeah, we just started digging in. We have people from different stages for acceleration or different types of accelerators in London, which, you know, we have Rune from Rockstar. They have a longer program and a vertical program. We have Todor, who they just went into doing early stage deals. They dropped the program altogether. And we have Techstars, which is like one of the most sought up, most wanted acceleration programs. So yeah, in short, that's what we talked about.
Yeah. I just pick up on that point. So, sorry I'm late. I got halfway to the airport. I realised I didn't have my passport. I then had to go back, get another flight. So I've only just stepped in through the door, so apologies. I think kind of judging, I think the question may have been, how do you judge a quality accelerator? And I think one of the key things to pick up from here is you must speak to the alumni, people who've been through it before already. If they say it's fantastic, then it should be really good. And if they don't say it's fantastic, then understand why. But it's a really, really good way of understanding whether it's any good or not.
So Tor, I just wanted to ask you, so now you're doing early stage deals. Are you now looking at accelerator graduates, or what are you looking at for your deal flow? What type of startups do you actually want to invest in?
Yeah. Just to add on that, usually the companies that are working with any investor or accelerator or whatever are quite easily to talk to. So this is the easiest thing that you can do, like a due diligence on any investor at the end of the day. So from our perspective, just like any investor, we are looking at our pipeline from all perspectives in accelerators, for sure, from our network, from recommendations from our companies also. So if just recently we were making some kind of a statistics, and you can assume that it's more or less evenly split, like 30% of those three areas each. At least this is the statistics with us, and most probably it's the same case scenario.
I wanted to pose a question in a different way this time. So, like, when shouldn't you bother with an accelerator? So,
Sorry,
when shouldn't you bother going to an accelerator? What's like the cues that you're either not gonna get value, or it's not for you, or it's for you, it's gonna be like a waste of 3 months and maybe a waste of investors' money?
It's up to the team and up to the company at the end of the day to choose which way to go. The accelerator or even an investment doesn't mean that you're not going to be successful, or it doesn't mean that you're going to be unsuccessful if you don't go there. So it might be an option that you make things faster and you avoid some certain mistakes early on.
Yeah, I could do that. I think that's prematurely going. A lot of startups trying to go to accelerators. The one scenario is having an idea, and an idea that's not really yet mature to be tested. I think even having an idea and going into a program like Techstars, Rockstar, any other, is really difficult to speed up the learnings on an idea stage. I think it's much faster when you have a product, you can go into the market, you can test it with the actual customers and not a bunch of mentors who might have an opinion on the product, but not your actual customers who are going to have to give you feedback. So that's the one point. Then there's the second, which has to do with the team. I see a lot of entrepreneurs applying, missing one or two co-founders, and they know they're missing these people, and they still feel that spending time applying for an accelerator makes sense. That doesn't really make sense. I mean, you might have all sort of temporary solutions of outsourcing the technology, but it's not the way you want to build the company, and most accelerator will tell you that. So before you even would get considered, these kind of steps needs to be taken in advance. And I think wasting time on applying and maybe even having the first couple of talks doesn't make sense.
I see several startups who apply for accelerators and they think that's going to give them focus. Does that happen from your experience, Max?
Just to pick up on the previous question, and then I'll come on to that. So I think there's the stage. What stage is the company at? So it can be really early stage, and that's not necessarily brilliant, or it can be really late stage, and depending on the flavour of the accelerator, then that might not be that useful. So the stage is one thing. Fundraising is another. One of the things that the accelerators help with is significantly is enable you to raise funds. If you're not interested in raising funds, then it's not necessarily the best thing to go and do, because it kind of part of the acceleration process is to get you ready for the conversations that you're going to have for raising funds. So if you've already raised or you're not going to raise, then actually question mark. I think third is sector. So actually hardware is quite difficult to accelerate. It's not impossible, and actually there are longer acceleration programs out there. But if you're in a sector that is not necessarily going to be delivered very quickly, that accelerated growth, then you might consider that an accelerator is not perfect. And then the final one was team, what shape your team is in. I do think if you've not got a technical co-founder, then it's very difficult to make the progress you'd like to make on the product during the program, and therefore you might not get value from the program. So it's really about whether you're going to get value as to whether it makes sense to apply. What was the question? Focus. Does it deliver focus? So Techstars runs a number now of corporate programs. So it does ones with Disney, with Barclays, with Sprint, Virgin Media, a whole bunch of them. And those tend to be sector focused, and so they will be very helpful in delivering mentors who deliver on the focus on the area that you're in, for example, fintech or food tech or whatever. I don't think certainly our acceleration process necessarily focuses you. I mean, we have a month where you meet 80 mentors. That's incredibly intense. It takes you away from your business. We then kind of build into building product and customer base. That does focus your business, and then we really focus on the narrative, which then is really about fundraising. So we have some focuses. They're not necessarily focused on the core business. So again, it depends what you want.
Just because they should be as practical as it can be, we're just gonna leave more time for questions. So we have like 7 minutes to take questions from the audience and some more from me. So are there any questions at this point? Raise your hands. Anyway, just to be clear, if you have any questions, just raise your hands. I'm going to try to pay attention, and then we're going to take the questions from your side. So I actually... sorry? Yeah. Can you get the mic there?
Hi. I was wondering, when you say early stage companies, do you mean a company that has a prototype or some company that just launched?
For whom would the question be? Anyone who wants to answer?
Anyone, yeah.
Okay.
Yeah, I think early stage means a variety of different things, but just to give an idea of what kind of companies we had, it's everyone from, well, just launching an MVP till companies or marketplaces with $500,000 in turnover already. For me, that's still fairly early stage, still only in one country, still trying to figure out exactly how to scale the model. Yeah, but it's certainly a little bit more than a landing page and a couple of signups. But somewhere in between, just launched the product, get a little bit of proof point from the market that there is an opportunity here, and well, up to where it makes sense for you as a founding team. It's hard to put a top on it, I feel.
Yeah,
it depends on the market.
On the most recent program we did, the average team size was 3 people. The half of the companies were pre-revenue, half had revenue. Pretty much everyone had, as I say, a technical founder, and we look for people who are co-founders, so a co-founding group. So it can be pretty. That's pretty early as a company, right? It's what we see is with the corporate accelerators, we see quite a lot more late-stage companies coming in. So maybe up to a couple of million turnover, but the kind of city programs that Techstars runs tend to be a bit earlier. Yeah.
Thank you very much.
Okay, I would actually want to hear also the answer from Todor, because you're doing early stage deals. What's an early stage deal for you?
I think we fall in the same
thing?
definition generally.
Okay. Okay, so we have one more question there, and then another one to the back.
In case that you already have a product, a software or something, and you basically have the product, but you don't have any traction yet because you lack the experience in marketing and sales. And also in case that you already have the quite good investment round finished, would you advise to go to an accelerator, or better to try find mentoring, or how would you advise to go with that?
So I think this is it's interesting. The stages of companies early on, there's tend to be a bit which is, first of all, build it, then get product market fit, and then scale it. And it sounds like you've got something built. I don't know whether you've got product market fit yet, but then you need to scale. So 500 Startups in London has identified that there's a scale-up issue post-seed, pre-Series A. So only a third of companies that raise seed actually gone to raise Series A. So they've identified that as a gap, and will pick up really good people at that stage, and then accelerate them through a growth phase. I think it's an incredibly important part of the journey for companies. Definitely, it could make sense for an accelerator, but again, it depends on your individual circumstances. And also who your shareholders are, because if they put money in, and then often if you come into an accelerator, then you have to have conversations with the shareholders as to why there's value there, because otherwise they'll look at the implied valuation and it won't be pleasant for them.
Okay, another mic to the back. Raise your hand higher. There you go. The guy in the red shirt. Second to last row.
Hello.
Could you please comment on the length of the program in an accelerator, and what do you see are some good practices? How long does the team usually spend on an accelerator, and why does it differ on the area of the accelerate of the area of the business, or how advanced the team is? How would you comment on that? Thank you.
Our program's 14 weeks long. It used to be 12, but because we've introduced a lot more time with investors into that, we've actually added a couple of weeks so that we can accommodate for that alongside a kind of more, I guess you could call it, traditional 3-month program. That's just what works for us and what we've tested with a lot of the teams over the past 4 years. That length seems to be about right in terms of actually getting them from when they come in to the point where they are investor ready at the end of it. And then obviously at that point, they don't just leave and we don't wave them out the door. They are part of the network and we continue to support them after that point. They're just not on the program. Some of the longer ones are for various different reasons, and Max actually pointed this out already, in that like some of the ones, particularly hardware, because of the ramp up time that you've got in terms of testing a lot of that stuff and prototyping, because it's way longer, you just need more time.
Maybe it's a good idea to ask Rune to tell us more about this, because you have one of the longest programs, right, that I know about.
Yeah, for exactly that reason. I think it really depends on what kind of product you're building to what kind of market. So as I mentioned, with health and energy, which are the 2 verticals we went into, it just takes significantly more time to validate whatever kind of proposition you have. So at least half a year for us was really what we felt we have to give to startups to be able to come out with sort of an investor-ready proposition.
That touches on the point that you said before, like how you're going to choose your acceleration program depending on the specifics of your product and your business. For example, that's how you tailor it. Okay, thank you. Sadly, we're out of time. I would like also to thank all of the guys here. Thank you, Max, for like driving back and then getting on a new flight. Thank you so much. So could you please join me in thanking them for their time and their answers?
Okay. Is it working? Thank you. Thank you again for all the useful lessons that we've learned so far.